sinking fund factor. Now let us understand what is sinking fund factor. If I ask you a question or if I give you a problem, and what is the problem? The problem is your company has borrowed 500 crores through debentures, through non-convertible debentures, redeemable debentures, 500 crore for 7 years. Now, obviously, at the end of 7th year, this 500 crore is to paid back or is to be redeemed, and the money needs to be given back to the debenture holders. Since this 500 crore is to be paid back to the debenture holders at the end of 7th year, obviously the company needs to start making provisions every year so that at the end of the 7th year, company has got 500 crores available with them for redeeming the debenture. The company has asked you as to how much company must invest every year so that at the given rate of interest on this investment of, let's say, 7%, these investments over 7 years together with the amount of interest will become 500 crore, so that company is able to redeem the debentures. If I ask you this question and take your advice, I'm sure it will make you to think for a while and understand as to how to find out the answer. And let me tell you, it is not difficult at all to find answer to a question like this. And why it is not difficult to find an answer to a question like this? Because we only need to understand something which is known as sinking fund factor, SFF, sinking fund factor. Now, how does this sinking fund factor helps us in answering the question that I just gave to you? And it is because what you and I need to do, you and I need to find out the sinking fund factor for the given case. And what is the given case? The given case is the tenure is of 7 years and rate of return incidentally in this case is also 7 years. So these two information are available with me. Tenure is 7 years and the rate of return is, or rate of interest is also 7% for this investment. So what I need to do, I need to find out the sinking fund factor. And how do I find out the sinking fund factor? I find out the sinking fund factor by using the formula K upon 1 plus K raised to N minus 1. And I'm repeating it once again. K upon 1 plus K in bracket raised to N minus 1. And this is the formula that will give me sinking fund factor. Now once I get this sinking fund factor, now then what I have to do, I simply have to multiply sinking fund factor with 500 crore that I need to accumulate at the end of 7th year. And I will get that amount which I need to invest every year for 7 years, so that with 7% interest on these investments, my accumulation will be 500 crore. And this is your sinking fund factor. So in other words, sinking fund factor helps you or tells you how much should you invest periodically so as to get a fixed sum at the end of the annuity. And this is sinking fund factor. Interestingly, sinking fund factor is nothing but inverse of future value investment factor of an annuity. Sinking fund factor is nothing but inverse of future value investment factor of an annuity. Meaning what? Meaning there is another way of calculating sinking fund factor, and what that other way is 1 divided by future value investment factor of an annuity, and that is 1 upon future value investment factor of an annuity will give me my SFF, sinking fund factor. And this is your sinking fund factor that will help you to find out or to plan your investment that you must make periodically so as to get a target amount. Now let us understand this again with the help of an example whether it really works or not. And here is your example.